Welcome to Empowered. I'm Elizabeth Naumovski. Are you thinking about buying a home? Before you take the plunge, make sure to tune in to today's show because we'll answer two crucial questions. What's the best way for women to start investing in real estate? And what are the biggest financial mistakes women make when buying a home? Today, I'm joined by Kinga Sharma. She's a mortgage agent with BRX Mortgage Brokerage. And today's topic is smart mortgage strategies and wealth building for women. Kinga, thank you so much for coming on Empowered.
Thank you so much for having me, Elizabeth. I'm excited to be here.
I'm excited as well. So let's begin. How can someone prepare financially for home ownership?
Yeah, that's a great question, especially today. So, the first thing I would say is know your budget. So, understand where you're at, what your financial fingerprint is. Save for a down payment, and depending on how much you have, you can put as little as 5% of the purchase price down or as much as 20%. Set aside closing costs. That's one of the ones that sometimes surprises people when they're in the lawyer's office signing. So typically, your mortgage professional will let you know what your closing costs are, but set aside some additional funds for that for sure. Important to build strong credit before you embark on this process because it makes a big difference. You want to have a solid credit score and then, of course, get a pre approval. Work with an expert to get a pre approval so that you know what your budget is and go in with a strong offer.
Okay, so what's the best way for women to start investing in real estate? Because a lot of them, I had lunch with a friend and she's confused, doesn't have a lot saved, doesn't really know where to begin. So, how do we start?
Yeah, great question. So I love helping women invest. I also started out myself as a young girl, and part of my investment strategy was actually to rent out the house that I lived in when I was in college and university. So, the first thing is, again, understanding your finances, where you're at. Getting a down payment for an investment property that you're not living in, you'll need 20% down payment. And the biggest thing that I would say is start small. You don't need to think about investing as I need to buy an apartment complex. You can start by, developing the basement suite in your own home and renting that out. Or you can start by buying a small detached in a secondary market and renting that out, or perhaps a triplex. So start small until you get comfortable with the process. And that way you dip your toe in and it's literally one step at a time.
I love the fact that you said that because when I bought my house, I bought a house that I really couldn't afford. And I struggled. I struggled a lot. And I actually talked to a lot of friends and said, I'm not coming out with you because I can't afford it right now. I have to put my money aside. And I did exactly what you just said. There was a main bedroom upstairs that, I had a roommate, basement, there was somebody living down there. So it almost became like this surrogate family where we all hung out, we all pitched in, and that really helped me with my payments. And a lot of people don't think about that. And I'm so happy that you brought that up because it doesn't seem to be on the forefront of people's thought process, especially when they purchase a home.
So critical, and I'm glad that you did that. It's essentially like you've got mortgage helpers, and it gives you a financial security. Really, it insulates you a little bit from the ups and downs because you've got rental income coming in. In addition, when you're looking to purchase something that will have rental income, we can use a portion of that income so it actually helps qualify you for that mortgage as well.
Oh, okay, well, that's interesting. That I didn't know. So, okay. How can I own a home without feeling financially trapped by mortgage debt? Because that seems to be a real downer.
Yeah, absolutely. Again, mortgage debt is huge and you hear it all over the news these days. So the first thing is avoid maxing out your pre-approval amount. So when you go and get a pre-approval, you have to provide your documents and then your lender or mortgage agent will say, "Hey, you can be pre-approved for a mortgage of 600,000." It doesn't mean that you need to max that out. Maybe aim for a little bit lower because there will be additional life expenses like groceries and insurance and taxes and entertainment. So, try to factor those into the picture. Ideally, your a mortgage agent will create a budget for you so that you can see what all of that will cost. You can
Kinga, hold on to that thought. We're going to go to break right now. Please don't. Welcome back to Empowered. I'm Elizabeth Naumovski. On today's episode, we're discussing smart mortgage strategies and wealth building for women. So, Kinga, before we went to break, I asked you, how can I own a home without feeling financially trapped by mortgage debt? And I had to cut you off to go to commercial break. So, please continue.
Yeah, absolutely. So the first thing was avoid maxing out your pre approval amount. The second one is try to make a larger down payment if that's accessible to you. The third thing is choose the right mortgage strategy. Some are more flexible than others. You may have a line of credit attached to your mortgage. The fourth one is to have an emergency fund. That's really important in case something happens. You know, the roof might crack or a tree might fall on your shed. And the last one is to do a mortgage review, an annual mortgage review with your mortgage expert, because your situation may change and the market out there may change.
I hear everybody wants mortgage rates to be lower. I need them lower. Is a lower mortgage rate always the best option?
Yeah, I love this question. You know what? It's absolutely not necessarily the best option. And the reason is because there's two reasons. First, we try to look at the global cost of the mortgage. What will it cost over the term and over the life of your mortgage? And the lowest cost mortgages tend to cost more, as well as tend to be less flexible, and you want that flexibility to pay down your mortgage faster. So that is a common misconception that we can easily sort of discuss by comparing the lowest term to a mortgage strategy that benefits you.
Interesting. So, what's the biggest financial mistake women make when they are buying their home?
Yeah, not looking at the total cost of home ownership. So, again, there's life expenses, insurance, taxes, groceries, all of that. We need to look at the whole cost of living in addition to home ownership. Too much focus on how do I get approved, not enough focus on the mortgage strategy. And what I'm seeing quite a bit with renewals is leaving it too late. And then that time pressure of, oh, I have to renew in 2 weeks doesn't allow for you to explore your options. So I start the renewal process, start early, like call 6 months prior to your renewal so you really have the time you need to take a look at what your options are.
So, I want to talk about options as well. Like these are great words of wisdom for people who've never purchased a property before and really need to know the background to it. But you see on the news when interest rates went up, people said they couldn't afford their mortgages. People were saying that they couldn't afford their homes because the mortgage had gone up so much, the mortgage payment. What can people do to protect themselves in that situation going forward?
Yeah, well, the first thing is talk to when you're coming into any kind of difficulty or concern with your mortgages is call your mortgage agent because they you do have your changing financial picture in those moments and there may be options that you're not aware of that they have. One example is you may be able to extend your amortization to lower payments. You may be able to skip payments. You may be able to get a little break if you talk to your lender or mortgage agents on those payments. The other thing in times of, say, high interest rate debt that a lot of people are carrying is there are ways to wrap it into your mortgage where you're actually going to end up paying less on interest rate. So you have a little bit more cash flow, and that really helps alleviate that cash crunch that people are feeling during the month when you have more month than you have money.
Mhm. So, when I purchased my home, my goal was to pay off my mortgage as quickly as possible. How can someone use their mortgage to create long term wealth instead of just paying it off?
Absolutely. So your mortgage decreases and typically your home value appreciates. And while it appreciates not quite evenly, it does appreciate. So you want to take a look at how much equity you have. And equity is the difference between the mortgage that you have, that's your mortgage debt, and the value of your home. So you're going to have increasing equity as time goes on. Now, you can use that a variety of ways. One of the ways that I see it being used often is taking the equity out and using that equity to purchase another investment property. What happens there is you've got your own property. It's an asset that's appreciating, and you've just used the equity from that asset to purchase a second asset. Now you have two assets appreciating simultaneously, like two seeds that are growing simultaneously for you.
Okay, we will continue with this talk a little bit more when we come back. Don't go away. Welcome back to Empowered. I'm Elizabeth Naumovski. Today's episode, we're discussing smart mortgage strategies and wealth building for women. Kinga, this question is asked all of the time. Should you prioritize investing or pay off your mortgage first?
Yeah, it's a great question. Okay, so what I would say is you need to consider your cash flow, you need to consider your stage of life and your lifestyle goals. Because a lot of people, as they approach their retirement, really want to focus on getting rid of that mortgage debt. Now, if you're able to do both, absolutely, a blended strategy is what I would recommend. But again, it really depends on what phase of life you're in. In general, Canadians have two big goals in life. We're talking high level goals. The first one is to get rid of their mortgage debt. And the second one is to have enough money for themselves to retire comfortably.
Very, very true. Very true. So, let's step back for a moment and look at financial setbacks. Whether there's a maternity leave, a sickness, a career change, divorce, whatever it is, how does that impact your mortgage options?
Yeah, anytime your financial fingerprint changes, it will have an impact on what you qualify for. So, for example, if you're on maternity leave, we may simply require documentation from your employer that you're going back to work. If not, then that is going to be a little bit of a setback. So, I would, if you're looking at refinancing or purchasing, maybe trying to time it that you refinance, purchase, or renew prior to that. Now, any kind of career change, whether you're starting a new business or starting a new job, may impact your borrowing. However, if you're consistently in the same industry, even if it's a different job, it's no problem. So it's really on a case by case basis that we need to look at.
So we all know that women make less than their male counterparts. We all know that women live longer, and we all know that women's jobs basically fluctuate up and down because as you discussed, you take care of children, you're on mat leave, you're taking care of your parents. How does home ownership impact women's long-term financial security?
Homeownership builds equity over time. So you are now building your own equity as soon as you've acquired a house, paying down that mortgage while the actual asset appreciates. So this provides you not only with equity, but stability and growth, which is huge. Not only can you draw on that equity throughout your life, but you can draw on that equity even in retirement as you grow closer to retirement. Some cases, you want to draw on that equity to plan for your retirement, to purchase a home. You can purchase a home in your 50s to ensure that you have it paid off, your second home, by the time you retire. So it really gives you a fantastic base with which to work with.
So what are the best ways to reduce interest costs on your mortgage? Because everybody's trying to, save. There's a lot of cost cutting, especially nowadays.
Yeah, absolutely. So some of the more well-known ways is accelerated biweekly payments. That basically gives you one extra payment per year, and that actually does shave quite a bit of time off your mortgage. You can also increase your regular payments, or you can put lump sums annually into your mortgage. Most lenders allow 10, 15, or 20%. However, there are hyper accelerators that enable you to pay your mortgage down many years sooner and shave a lot of money off both your interest and mortgage that need to be discussed with your mortgage expert.
So, it's funny that you just mentioned all of those 3 because that's exactly what I did. I was given great advice when I bought my home, and yes, I paid my mortgage off every other week and more than whatever the mortgage payment was, and if I was fortunate enough to get a bonus, that bonus would go towards a lump sum payment. And I think that's really, really important right now. I know everybody's struggling. I know people are having a hard time putting food on their table, paying their mortgage and everything else. But I think a lot of the nuggets that you are giving everyone right now, these words of wisdom, will be very, very helpful to them, especially going forward with everything that's going on in the environment. So please don't go away. When we come back, we'll have a lot more tips from Kinga. Welcome back to Empowered. I'm Elizabeth Naumovski, and I'm joined by Kinga Sharma. We're discussing smart mortgage strategies and wealth building for women. And Kinga's a mortgage agent with BRX Mortgage Brokerage. And Kinga, there was something that you wanted to add to our discussion prior to going to commercial break about, the 3 ways to pay down your mortgage.
Yeah, absolutely. So prepayment privileges are a huge, huge way. Everybody should know what their prepayment privileges are and try to utilize those if possible. And actually, statistically, only about 3% of Canadians utilize that strategy. And it is a fairly easy way of prepaying your mortgages. So definitely be one of the 3%.
The best kept secret, quite frankly. Like, you have to work hard to be the 3%, but be it because it will really help you with the home ownership. So now, what's the best way to use your home equity when you're retired in retirement without selling your home?
Yeah, absolutely. So I talk to a lot of people that are retired, and very often they believe the only way to extract equity from their house is to sell their property, and that is not the case. So first, the reverse mortgage allows Canadians that are 55 years and older to access equity in the home tax-free. There are no required monthly payments because that loan will be repaid when the client sells the home or the last person passes away. And you can actually access up to 55% of the value of the home. So that is one way to access equity in the home. The second one is through a HELOC. Now, with a HELOC, you do have minimum payments to make, which is interest only payments, and you do have to income qualify. So I always suggest when I talk to people that are within 5 years of retirement, let's look at a potential HELOC option for them so that it's available to them in retirement. Once they're retired, the HELOC may be a little bit more challenging to qualify for.
Okay, so just as an FYI to viewers, I did do an entire show on reverse mortgages, and a lot of people are very interested in it as well. And I'm glad that you brought that up. How do I know if a rental property is a good investment for me? Because I know a lot of people were purchasing so many condos or whatever, and renting them out through Airbnbs, but how do you know that this is right for you?
Yeah, it's really important to analyze a number of things when you're contemplating getting into this area. So first, is it cash flow neutral? Is it cash flow positive? Even if it's cash flow neutral, this might be a really, really great investment. But you want to know there are two types of appreciation: organic and forced appreciation. Organic is simply the value of the property increasing naturally. Forced appreciation is when you go in there and you add a basement suite or another kitchen or possibly another bedroom. So there are ways of properties appreciating, and you want to make sure that what you're getting is going to appreciate. Location. How easy is it to rent the property? Is it an in-demand location or not? Talk to a property management company. Find out from them how easy is it to rent the properties they manage and what sort of rents are they getting? So you want to know the geographical location and the trends and economic ongoings of that geographic location. So you know what sort of infrastructure is planned around there, because that will increase the demand for that particular neighborhood. How many revenue streams does it have? And is there a potential to add in revenue streams in the property? Basement suite, garden suite in the garage. Is there anything else that you could do to that property to add another revenue streams? Those are the key things that I would suggest you think about and research.
Kinga, just 5 words of wisdom before you go get your mortgage. What do you need to do quickly?
Yeah, absolutely. Absolutely. So I would say you need to make your mortgage part of your wealth planning strategy and take an active role in your mortgage and finances.
Wonderful. Thank you so much, Kinga.
Thank you, Elizabeth.
Kinga's words of wisdom regarding purchasing real estate are: we as women need to take an active role in our mortgage decisions instead of relying on a partner or financial advisor. I'm Elizabeth Naumovski, and I'm here to empower you, make frugality fashionable. Thank you so much for watching. See you next time. Bye for now.